Benchmarks near days high as the Nifty surges to 25,700 mark while broader indices extend further gains. IT stocks see a sharp reversal, especially after the Infosys Anthropic announcement. FMCG remains upbeat, but real estate and private banks are the laggards.
A week after concerns over disruption from Anthropic, Infosys has partnered with the global giant to roll out enterprise-grade agentic AI. Starting with telecom, they will build industry-specific AI agents integrating Infosys Topaz and Claude models to automate workflows, modernize legacy systems, and accelerate software delivery.
And Hindalco slips after InCred downgraded it to reduce, warning of a possible 20% fall in aluminium prices and heavy capex-led pressure. Cochin Shipyard jumps after winning a 5,000 crore Navy vessel order, while TVS supply ties up with Italy's ALA Group to tap India's fast-growing defense and aerospace market.
Day 2 of the India AI Impact Summit shifts focus to real-world deployment with sessions on AI-powered data centers, healthcare, fintech, telecom, public policy, sovereign AI. Global leaders, policymakers and industry heads are discussing how to scale AI responsibly and strengthen infrastructure.
Hello and welcome. You tune into Buy Now Sell Now. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll get all your stock-specific questions answered. So please keep sending in your questions, your buying price and your holding period, and we'll get them answered by our experts. But before that, let's take stock. And you can see the number also flashing on your screens. So please keep writing in your queries to this WhatsApp number that's flashing right now. But let's take stock of how the market is shaping up at this juncture. Well, it's again a very, very quiet day. I mean, there's nothing much that's happening, a lackluster day coming in, but we do see some reversal that's coming in, at least as of Nifty is concerned. Nifty is very, very flat right now. We have ticked up 78 points from the day's lows, but 25,650 is what Nifty is holding on to. Nifty Bank has recovered more than that. It has recovered almost 400 points from the day's lows. Right now, that has also turned absolutely flat. Broader into the market, if you can pull up the mid cap and the small caps, the mid cap is trading absolutely flat. Actually, there are no moves coming in right now. Very flat moves and small caps also trading with gains of 0.2%. So the entire basket is trading within a certain range. But as far as the sectors are concerned, the interesting thing to note is Nifty IT that is posting a solid reversal. 1.7% of uptick, that is what we are seeing. Now, this is on the back of the deal with Infosys and Anthropic. Now, remember, Anthropic had spooked the street, especially the tech pack, last week, whether it is in the NASDAQ or back home. We did see that blowout coming in the IT stocks, and that has now reversed because of this deal coming through. So Infosys is trading 3% higher on the back of that deal. Even the mid-cap space, Persistent, HCL Tech, Infosys, Coforge, all of these are trading with gains of 1+%. So the entire IT pack is posting a solid reversal. PSU names are also doing very well, and FMCG is also holding the fort right now. So that's how largely the market texture looks like. But Kavita, it's time to get going with the show then.
Absolutely, and we have a lot of queries that are trickling in, and definitely once again the WhatsApp number especially, that's flashing on top of your screen. So note that number down and send us your stock specific queries, the name of the stock, the price at which you bought it, and the time horizon till which you want to stay in that investment. And we will give you a short-term, long-term, technical as well as a fundamental view. And the guests on the show today are Kunal Potra and Mr. G. Chokalingam. Hi, morning. And okay, that's the WhatsApp number that you can just note down, 865-797-4571. But gentlemen, good morning and welcome to the show. And before I dive in and start taking our viewer queries, a quick tech check, Kunal. A good comeback. Can we say that for the markets?
Yeah, absolutely. I think good morning, first of all. Good comeback from the index yesterday, and I would say a decent kind of a follow through for the markets. Maybe the index may not be able to represent for the kind of price action which you've seen today, but the market breadth opening up. So the advanced decline ratio is almost 2:1. For the index, even after a minor gap down opening for both the Nifty as well as for the Bank Nifty. I think what matters over here is the sentiment starting to improve, and we've seen many a times that market sentiment improvement generally leads into a stable recovery for the indices as well as the overall market as such. So I believe now from here on, if the market breadth continues to remain positive, there could be a very strong indication that the markets can head up higher. There is a minor resistance for the Nifty at 25,750 mark, which also apparently coincides with the gap or the down gap or the upper end of the down gap the index had seen the last 3 or 4 trading sessions. So I think that's one level to watch out for. If we break past about 25,750 mark on the spot levels, that's where I would believe that we may see a better and a much more higher accelerated movement on the upside for the indices.
So that's a take on the market, but then quickly just look at, let's look at few IT stock specific queries from our viewers. This is from Mr. Subrata Mukherjee and he wants to buy, okay, he is asking the right time to buy TCS, HCL Tech, and there's one more query from Mr. Sriram Raghuraman from Chennai. He's already holding 20 shares of, that's KPIT Technologies though, that's average price is almost 550. He wants an overview on the stock. So let's talk about all of these three counters. Let's get them a technical as well as fundamental check. Chokalingam sir, first I'll come to you. Let's discuss TCS, HCL Tech, right time to buy, and can Mr. Raghuraman, who's bought KPIT Technologies at an average price of 550, can stay invested?
KPIT at best is a hold.
Okay.
Tactically, maybe 5% rebound could be there because the valuation wise, it is still stretched around over 30p on trailing basis. And as far as other stocks are concerned, I prefer Infosys. That also can possibly give 10-15% upside tactically from current level because most stocks were beaten down enormously. Of course, one need not rush to sell today IT stocks because they were beaten down heavily. There is a possibility of 10-15% on a rebound. But post that, one can restructure and continue to hold stock like Infosys. That's my view.
All right. How excited are you about the tie-up that Infosys has announced with Anthropic?
Positive. Even before this, Infosys has announced several technological tie-up, and they also claim to have got into a lot of AI projects. So therefore, this stock can give even beyond 15-20% return. But however, I continue to maintain my view that the long-term wealth creation story is over in large IT stocks. Already they were growing at 2 to 4% in dollar term. And now with the AI, it may be 1 to 3% only at best in the short to medium term. That's for at least for 1 or 2 years, unless some other structural change happens favorably. But tactically, yes, there's a good opportunity right now.
Long-term story fundamentally is intact for large cap IT. Kunal, what's your take? Also, if you want to answer specifically on the stocks mentioned.
Yeah, I would believe largely that IT stocks and buying IT stocks at current levels is a better strategy purely in terms of risk reward. I'll look at it in this manner. The news flow would keep on coming, good prices, good news. They would never come together for stocks, and specifically with the kind of sell-off which you've seen, a 25% broad correction for the IT stocks and almost like a 20-22% correction for the IT index is what we've witnessed in the last 10-15 days or so for the IT stocks. So I think in that context, it's going to be a good opportunity to try and chip in to these names. I would look at larger cap names. I think Infosys, HCL Tech, Tech Mahindra. These could be the best recommendations, which probably I think the investors could look at current levels. And specifically, given the fact that these were the few stocks which were holding their fort in the last I think many months of the IT correction. So I think in that context, it's always better and safer to try and invest into the performing stocks and the ones which have been more strong and resilient in terms of market volatility.
All right, so that's the word coming in as far as the IT pack is concerned. That is in focus yet again, but this time round it's on the back of a reversal. But let's get a live caller on board now. This is Madhava who's calling in from Andhra Pradesh. Hi, good morning, Madhava.
Hi.
Thank you so much for joining us, and tell us what's your question.
Yeah, I want to know the short-term purpose for PG Electroplastic and Samvardhana Motherson.
PG Electroplast and Samvardhana Madan. What's your question? Should you hold or not?
No, I want to invest for 1 lakh for these two.
You want to invest for 1 lakh for the next 3 months, PG Electroplast and Samvardhana. Kunal, what's your view?
So I'm bullish on both of these names. I think PG Electroplast specifically, I think the stock is nearing a breakout. I've tracked the stock recently also. 624, 25 thereabouts. Suddenly the momentum slips out for PG Electroplast. So maybe I think you can wait for another 1% on the higher side. Let the stock break past about that 625 levels and give a closing. I think if that happens, we may expect the stock to come back into a good momentum breakout because it's nearing that resistance zone And we've seen that the stock has tested this level almost 3-4 times in the past few days. So that indicates that it's trying to break out. I would suggest that either wait for a breakout confirmation above 625 plus levels for the stock to show signs of a confirmation, or in other cases, in case if the stock drifts down and comes say, closer to 600 mark, then the risk reward could be a little bit more better to try and initiate a buy, anticipating the breakout on the upside. Samvardhana Motherson, on the other hand, I think it's been a fantastic trending stock. It's a classical trending move for the stock in the last 6 months to 1 year, a classic pattern of higher highs and higher lows. The only concern over here for Samvardhana Motherson is that the risk reward is a little skewed, maybe 1:1 for the stock price. So you may not go for a full quantity buy at current levels, but I would suggest buying 50% at current levels and wait for a dip, say closer to 126, 127 could be a good zone where you can look to buy the additional quantity, even if it's a short-term play.
All right, so that's Kunal's view on Samvardhana Motherson and PG Electroplast. But Mr. Chokalingam, I'll get in your word as well. What's your view on Samvardhana and PG Electroplast, say for a period of 1 year?
Samvardhana is slightly stretched in valuation over 39 PE, but still one can hold for a year or so because it is a solid growth story, good quality of management. As far as PG Electroplast, I would not dare to buy at current level because recently the government has given license for nearly 40 license for EMS under PLI scheme. I think there is going to be a structural shakeup in EMS domain in the sense there will be a lot more suppliers. Even L&D is getting into it. So here the valuation comfort is very important, and I do not have that kind of valuation comfort with PG Electroplast.
All right, so that's a take coming in on both of these counters, and with that, it's time for a short break. But then post that, let's keep continuing our viewer queries session. All you have to do is just send across your question on the number that's flashing on the screen. See you after this break.
Pace of change is something which obviously we have not seen. We all know about the trillions of dollars being spent and all that. But even the technological change, I mean, 2023 Foundation Frontier model had 100 billion parameters. Today it has 1 trillion parameters. There are only 10 to 12 agent networks. There are 60 agent networks. So this is only going to go up. In the US alone, there are at least 5 frontier models. In China, there are big 4 or big 5. So this is only going to go up. In India, we have seen so much action, and you'll see some big announcements this week on Indian-based sovereign models. So I think this is something. Now, there are certain implications of this, because if I'm a businessman and I have to choose my technology, how do I make sure I don't make the wrong choice? Because something which I invest in today may have fallen behind tomorrow. Already people are facing this reality. And therefore, how do you architect your technology so that you can deal with this rapid change is a very fundamental and structural need for enterprises. And again, they need help on that from somebody who has done this in 2,000 locations and understands the pros and cons of every approach. But the main thing is that the technology is far ahead of its deployment. Because of this race and spending billions and some AGI and all that, the technology is moving faster than the ability of enterprises to deploy it. If you look at this chart, you can see that the model performance is going up, but the progress in implementing is not really. Because implementing this is hard stuff. Fundamentally, it's about organizational change, business change, retraining your people, thinking about non-deterministic approaches, changing your data so it's no longer in silos. So fundamentally, we have a situation where there's a deployment gap between the power of the technology and the capacity of businesses to use this. So if you guys think that some better product has come, nothing's going to happen because the problem is here, not there. You get it? It's about how fast companies can implement, so you have to look at that. And this is, we call this the deployment gap, but this is actually a concept by Professor Clayton Christensen at Harvard 25 years back. He called it technology overshoot, where technology gets ahead of the need. And in fact, he argues that that's how newcomers come, because newcomers can then launch new products that are not as sophisticated, but good enough for customers. And Satya, in his recent blog, talked about model overhang, which is the same idea. Fundamentally, the tech will keep getting better and better because billions are going to be poured into it. There's massive competition, but enterprise deployment is not going to go up. And this deployment gap is what we can help to address. So again, it's a very important point. Now, I think talent transformation is huge. It's not that you will need talent, but it'll go from QA testing or development. We have all kinds of new roles: AI engineers, forward deployment engineers, AI leads, forensic analysts, data analysts. So fundamentally, the challenge will be how do you take your workforce and make sure that they are reskilled and ready for the new business. And that's really the challenge that all the firms will face. And this is something, so there will be roles. Now, the way you hire will change, the way you train will change, the way you deploy will change. All that is going to happen. And I think we'll have sessions on that. But fundamentally, there will be a need for people, but they'll be doing different things.
All right, so Infosys at India AI Summit, and definitely it's a place where global pioneers convene to discuss AI's transformative impact. But then moving on and getting back to our show where we're answering viewer stock-specific queries. This is a question coming in from Mohit from Ludhiana, and he's bought a container corp at 512, 200 is the quantity. Time horizon is 3 years. Chokalingam sir, I'll come to you for this. Any comment on this, especially considering the buy price?
I'm sorry, I couldn't analyze this company. I'm not in a position to give view.
Sure. Kunal, any view?
Yeah, I think Concor is something which has been a downtrending stock over the last, 2 years or so. I think it's fallen from 900 levels to a recent low, which is around the 475 to 500 range for the stock price. However, it looks like that maybe the stock could probably have formed a bottom for itself on the medium to long term charts. 500 or the sub 500 mark has been tested twice in the last 12 months for Concor. And in the last attempt when the stock had taken a bounce, it had moved towards 600, 650 marks. So it was a decent 30% bounce for the stock price. A second retest towards the low generally indicates that the stock is trying to re-establish a major demand zone or support zone for itself. So if you're in from a medium to long term perspective, I would suggest that you can continue to buy or maybe hold Concor at current levels, because the risk reward is a lot more better than what it was maybe a couple of years back.
All right, hang in there, Kunal and Mr. Chokalingam. We'll quickly go to the AI summit that has kicked off at the Bharat Mandapam, and my colleague Sumita is gathering all the latest that's coming in from the stalls that have been set up at the event. First, let's get a close-up of how AI is expected to reshape the retail shopping experience for consumers, from trying on outfits digitally to creating regional caricatures with images shared. Sumita, let's see you try on the new retail experience. Let's take a look at that.
How will AI change or reshape the retail experience? Well, that is another big question that is currently being explored here. In fact, I've come to this very, very interesting pavilion over here. This is the store of the future. They have some, clothes which have been set up here, but this is the most important part. Now, this is essentially this try-on outfit screen that you see here. This is essentially being done, especially when you see a lot of queues at retail stores. So this helps you try on an outfit, and you can see whether this works for you or not. And of course, you can select from a whole range of the company's collections as well. So let's try and see how this works. All right, then let's first tap on begin the experience. It is now going to take my picture. And now I can pick from some of these styles that are mentioned over here. And let me try this. Try on. And let's see what we have. It's now going to take my measurements basis on the image that I shared, and then right here, it's taking my measurements, and on the basis of these measurements, it is going to sort of fit that piece of cloth that I picked up. Yes, taking a little bit of time. All right then. Almost there. This was the original. This is the new one. So this is how retail experience of the future will look like. In fact, let's try reimagine as Indian art. I'm going to try Rajasthan. Generate art style. This is going to paint my portrait in miniature and FUD style of Rajasthan. All right then, this is a nice caricature in Rajasthan's miniature and FUD style that I've gotten. And I can scan this to download this. But very, very interesting AI generated art, and this representation is almost close to reality. But this is what the store of the future is going to essentially look like. The bigger question hence is, will people lose their jobs, given the fact that if machines like these are going to do the jobs of store managers, then how many jobs will be lost? That is the big question.
Well, that's clearly putting AI to its job, but it's time to put it to use as the hype around the same is not over, says Sandeep Patel, who's the MD of IBM India and South Asia. He also talks about the company's hiring mix and more. Let's take a look.
I've always said that we are past the hype around AI. Now we've got to put AI to use and scale it. We've been doing it to ourselves. So IBM has been using AI for our own operations, to automate our own operations, get efficiencies, get productivity improvements. We started off about a few years ago to infuse AI into using it for ourselves. We call it ourselves being client zero. And we started off with an objective of taking $2 billion out of our bottom line.
Right.
We exited 2025 by taking out $4.5 billion out of our bottom line by scaling AI within our own operations. So that is what the power is of AI, where if we use it for our gaining productivity. Actually, I look at it as augmented intelligence, getting a lot more closer to customers, being able to respond to customer queries better, and driving overall productivity.
Okay. Let me also ask you, since the kind of installations that we've seen here, they are essentially about the fact that AI is going to reduce workload, right? It is going to assist humans, which also essentially means that some of the jobs will be wiped out. For example, if you have an automated process in a store, in a retail store, in a hospital, those jobs will be wiped out.
So I'm going to answer that with a question. You tell me one technology from time immemorial that hasn't resulted in process efficiencies and making things a lot more efficient and more productive. That is exactly what AI is doing. But what that does is it creates other jobs of different channels, and it enables knowledge workers to do more. I'll give you another perfect example. We use AI for driving automated coding, for example. We are in the software business. So AI actually enables us to do a lot of automated coding. But what that does is it frees up coders to do more enhanced code development. It enables us to, take out products faster, drive software efficiencies, and so on. So that is the way we've got to look at any technology, including AI.
What's the hiring mix that you look at?
So we look at junior coders. We look at people who understand technology and have the technology fundamentals. I think there is a huge opportunity for prompt engineers and a lot of the other technologies that will make AI operate at scale.
Citi remains positive on Go Digit, highlighting stronger high-quality channels, rising motor renewals, tighter claims control and growing traction in usage-based products. Tech-led efficiency and fraud checks are seen supporting margins and profitability.
India and the US are in the final stage of signing the trade deal, with the Commerce Secretary confirming that the legal framework is being formalized. A negotiating team will visit the US next week to close the remaining issues.
French President Macron is on a multi-city India visit, meeting PM Modi in Mumbai, signing key MOUs, attending the Innovation Forum and cultural events at the Gateway of India before heading to Delhi for the AI Summit. His visit highlights a deeper strategic innovation and cultural ties.
Real for you, the AI benefit, whether it's for revenue growth, whether it's for cost optimization, whether it's for innovation. So our entire go-to-market team, all of our segment leaders, all of our practice sales leadership are working with clients with this format to make sure that the AI becomes more and more embedded into the work that we're doing with clients. And this is sort of pulling back a little bit. We've always talked about navigate your next. This is how we are looking at the journey. The navigate your next has changed because technology changes, and this next is about AI. It was different in the previous navigate your next, but the navigate your next concept, the client relevance remains the same. Where we are coming from today, the issues that Nandan shared, where we are going in the future, what the opportunities are, and what are our strengths. Our strength is absolutely clear, the understanding of what the client landscape is. There are some clients that we work with where we have probably as good an understanding of their landscape as some of the client teams have. And this makes a huge difference in how we navigate through that through our AI toolkit. Our domain knowledge, our engineering talent, which with our training, I've always believed is one of the best that there is, and the platform and IP that we have built, which again we will highlight a little bit later today. Now, there is a dynamic in AI services which all of you know and we understand. One, there's a huge opportunity. The one that I mentioned, the 6 areas with an external analysis, we understand that the opportunity is between $300 and $400 billion in the year getting to 2030. So over that time frame, at that time in 2030. At the same time, we have several entities have made estimates. We have our own views. The AI productivity leads to compression in IT services. However, today we have a clear view that the opportunity is massive and large, and that will become the driving force of what we will grow and drive through in the next coming years. Now, in putting all this together, we have created our own playbook, and this is essentially what we want to share with you in depth today in each segment of the day. Of course, my vision and objective is that we unlock all of the AI value for our clients, and we are absolutely on our path to drive that. There's one set of discussions on the new services, what we are calling AI first. So with our delivery leadership, with our segment leadership, we will share with you what it means, where we are doing it, what are the examples, what are the benefits. Then we have AI augmented services, where we are taking all of our services and making sure that AI is infused into it to become even more relevant for clients.
All right, that's Salil Parekh of Infosys speaking about the opportunity of AI. But with that, it's time for us to slip into a short break. Don't go anywhere after the break. We'll come back and get all your questions answered. Stay tuned.
Hi there, welcome back. You're watching Buy Now, Sell Now, where we're answering your stock-specific queries. We have our live experts with us who are answering your queries live, but that's the number, that's WhatsApp number that you can see on the screen, 865-797-4571. You can note this down and send across your stock-specific questions, and we will get it answered live by our experts. Kunal Bothra and G. Tokulingam, our guests, are there on the show today, and we also have a live viewer, Mr. Jay Krishnan from Kerala. Hi, good morning, Mr. Jay Krishna. How are you doing today?
Good morning. Fine.
Hi. Thank you so much for sending us your question. Our both guests can hear you. You can ask your question.
Yeah, my question is my entry level Maruti Ultratech and for 9 months with an expected target.
All right, sure. That's it. You want to ask anything on Ashoka Wilcon as well? Okay, so let's get you the right entry levels for Maruti and Ultratech Cement for 9 months. Kunal, I'll come to you first.
See, I think both these stocks are, I would suggest, a good buy at current levels. You might wait for maybe a little bit more downside, but I'm not sure that the downside could be a little bit more pronounced because Maruti, for example, has gone through a decent correction from 17,500 plus levels towards a recent low. The stock hit 14,500 mark. It's a decent 3,000 point odd correction for Maruti. In the same vein, I think Ultratech Cement has gone through a decent uptrend, and the stock has been one of the strongest cement stock, I think, in the last 3 months or 6 months in terms of price performance. So both of these stocks are attractive at current levels, and I would suggest that if you're looking at a buy, you can look at a buy at current levels. Maybe buy 50% of your expected quantity at current levels, and in case if in the next couple of weeks if there is any kind of a further 3% to 5% correction further, you may look to chip in with the balance quantity.
All right, that's a technical view from Kunal. But then, Chokalingam sir, what would you recommend?
Ultratech is good to hold or even buy, but the 9 months I am not sure whether it can give me a return, but definitely beyond 1 year it can give. In auto space, I prefer M&M to Maruti because diversified segments and has been doing phenomenally well in almost all the segments and also going for massive expansions. So I firmly believe that M&M can outperform Maruti.
All right, so that's the view coming in. Thank you so much. I hope your question was answered. But let's move on to the next question that is coming in from Vijay Kirti, who's writing in from Chennai. He says he holds 550 shares of REC. He's bought at 604 rupees. And as the merger is announced with PFC, what can be the best options? Should he book loss, switch to PFC? What should be the technical view for that? Coming to you, Kunal, need a technical view. Post the merger, he wants to know what is the best option. Should he switch to PFC, book his loss? He's bought it at 607.
Yeah, I think switching to PFC could be a better option, of course, because of the merger news the stock has seen. And I think when you look at this in terms of the relative chart, post the announcement of the news flow, rather pre the announcement of news flow, both of these stocks, they were moving in tandem. Post the announcement of news flow, you've seen PFC moving up higher, above the 200 DMA, above the 400 levels, and RSC somehow has struggled, at 350, 360 mark where it's trading right now. So that clearly indicates that we are looking at a stronger chart emerging potentially with PFC with respect to RSC. So that also I think is another reason why I would believe that you should make that switch.
All right, let's move on. We have another viewer on the phone line, Mr. Venkat Raman from Bangalore. Hi, sir. Good morning. How are you?
Very good morning. I am doing good. I have a question on Ashok Bilcon.
Sure. Okay.
Having 1,000 shares at the rate of 233.
Okay.
Good morning. Good morning.
Sir, can you reduce the volume or maybe put your television on mute and just talk to me on the phone? Yeah.
233.
Sure. Okay.
I just want a suggestion from the expert whether it's a good time to buy more or to sell.
All right. And you want to hold it for what? More than a year?
Yeah, maybe up to 2 years I can hold.
Up to 2 years. All right. Chokalingam, sir?
Yeah. So last 3 years, revenue is quite stagnating. But then to be fair to the stock also corrected a lot. I would say that one can hold. From current level, 15-20% return, 12 to 18 months is very much possible. So I would give a hold recommendation.
Fundamentally, it's a hold. Kunal, what would you recommend?
Well, yes, you can continue to hold on, but I would not suggest to average out the stock at current levels because what's happened is 2025 start when the stock had broken below 240 levels. That was the point when the stock had broken below the long-term moving average, and since then there has hardly been any decisive breakout for the stock above the 200 DMA. So when you have a stock which is struggling since the last 12-13 months, it's difficult to preempt that when the turnaround could happen. I would suggest that you can look to buy once the stock confirms a breakout above the 200 DMA. That would be a point where a big turnaround could be at play for the stock.
All right, that was the last stock of the day, last question of the day. Thank you, Kunal and Mr. Chokalingam. Thank you so much for joining us and answering all the stock-specific questions. We'll let you go on that note. And with that, it's time to pull down the curtains on this edition of Buy Now, Sell Now. Kavita and I will take your leave. Thank you so much for tuning in.